Listen, I'm going to share something with you today that took me decades to figure out. Decades. And I'm not being dramatic when I say this might be the most important financial lesson you ever learn. It's the one thing that separates people who actually build wealth from people who just look wealthy. And there's a massive difference between those two groups that most people never understand until it's too late. I've been investing for over 40 years. I've built companies from my basement that sold for billions of dollars. I've sat across from thousands of entrepreneurs on Shark Tank and evaluated their businesses. I have a net worth of $400 million, and people always ask me the same question. Kevin, what's the secret? What's the one thing? And for years, I gave them the standard answers. Save more, invest wisely, buy dividend stocks. And all of that is true. All of that matters. But it's not the real secret. The real secret, the one that nobody wants to hear because it goes against everything our culture teaches us, is something I've never fully explained until now. And it's going to change how you think about money forever. Because this isn't about some fancy investment strategy. This isn't about picking the right stock or timing the market. This is about the fundamental relationship you have with money itself. And if you get this wrong, it doesn't matter how much you earn. You will never be wealthy. I've seen people earn $10 million and end up broke. And I've seen people earn $65,000 a year and retire as millionaires. The difference is what I'm about to tell you. Now, before I reveal this secret, I need you to do something for me. If you're serious about building real, lasting, generational wealth, if you're tired of the same recycled financial advice that never actually changes your life, if you want to understand how the truly wealthy think differently from everyone else, then hit that subscribe button right now. Smash it. Join this community. We're building something here, a place where we tell you the truth about money that nobody else has the courage to say. We deal in reality on this channel, not fantasies. So subscribe, become a member, because what I'm about to share with you is the foundation of every fortune ever built. And most people will never hear it because they're too busy chasing the wrong things. Here it is. The biggest wealth secret I can share with you after 40 years of building, losing, and rebuilding fortunes. Never change your fundamental lifestyle as the money piles up. I'll say that again because I need it to sink in. Never change your fundamental lifestyle as the money piles up. That's it. That's the whole secret. And I know what you're thinking. That's it? That's the big reveal? Save money and don't spend it? Kevin, that's obvious. And if you think it's obvious, then explain to me why 90% of people do the exact opposite. Explain to me why professional athletes who earn $200 million over their careers go bankrupt within 5 years of retiring. Explain to me why lottery winners who receive $50 million are broke within a decade. Explain to me why doctors and lawyers earning $500,000 a year are living paycheck to paycheck. If this secret is so obvious, why does almost nobody follow it? Let me tell you why. Because our entire culture, everything you see on television, everything you see on social media, everything you hear from your friends and your family, all of it is designed to make you spend money. Every advertisement, every influencer, every car commercial, every real estate agent showing you a house at the very top of your budget, all of it exists for one purpose, to separate you from your money. And it works. It works because human beings are wired to signal status. We want people to know we're successful. We want the nice car in the driveway. We want the big house. We want the designer clothes and the expensive watch and the fancy vacations. And there's nothing wrong with wanting nice things. But here's the problem. Most people buy nice things to look wealthy instead of actually being wealthy. And looking wealthy and being wealthy are not the same thing. In fact, they're usually the opposite. The more you spend to look wealthy, the less actual wealth you have. It's a trap, and millions of people are stuck in it right now without even realizing it. Let me explain something that changed my investment philosophy forever. When I started doing serious research into where wealth actually comes from, I discovered one fact that blew my mind. Over the last 40 years, 71% of stock market returns came from dividends, not capital appreciation. 71%. That means the majority of wealth generated by the stock market didn't come from stock prices going up. It came from companies paying cash dividends to their shareholders, and those shareholders reinvesting those dividends to buy more shares, which generated more dividends, which bought more shares. It's a compounding machine. But here's the thing, that machine only works if you leave the money alone. If you pull money out of your investments to fund a lifestyle upgrade every time you get a raise or a bonus or a windfall, you break the compounding cycle, you reset the clock, and you never build real wealth. Here's what most people do. They get a job earning $50,000 a year, they spend $48,000, they save $2,000, then they get a raise to $60,000. Great, but instead of saving $12,000, they upgrade their apartment. They get a nicer car, they start eating out more. Now they're spending $58,000 and saving $2,000. Same savings, higher income, no progress. Then they get promoted to $80,000. Bigger house, new wardrobe, fancier vacation. Now they're spending $77,000 and saving $3,000. Their income went up 60%, but their wealth barely moved. This is called lifestyle inflation, and it is the single greatest destroyer of wealth in America. It kills more financial futures than bad investments, market crashes, and recessions combined, because it happens silently, gradually, one small upgrade at a time, until one day you're 60 years old, earning a great salary with almost nothing in the bank. And it's not just the big upgrades that kill you, it's the small stuff, the daily stuff, the stuff that doesn't feel like spending because each individual purchase is so small. I can't stand it when I see people who are making $70,000 a year spending $28 for lunch every single day. Think about that. $28 a day, 5 days a week, 50 weeks a year. That's $7,000 on lunch. Now think about what happens if you take that $7,000 and invest it in an index fund earning 8 to 10% for the next 30 years. That's over $790,000, almost $800,000 from lunch money. Or think about the $5 coffee habit. $5 a day, 365 days a year, that's $1,825. Invested over 30 years at 10%, that's over $300,000. You're drinking $300,000 worth of coffee. I make my coffee at home for 20 cents. It takes 2 minutes. And those 20 cents versus $5 compounded over decades is the difference between financial freedom and financial prison. But it's even bigger than coffee and lunch. It's the car you didn't need to upgrade, the apartment you didn't need to upsize, the subscription services you forgot you were paying for, the gym membership you never use, the fast fashion that falls apart in 3 months, the impulse purchases at 2 in the morning on Amazon. Each one feels harmless. Each one feels like it doesn't matter, but they compound in the wrong direction. They compound against you, draining your wealth potential drop by drop, dollar by dollar, until the opportunity to build real wealth has passed you by. Here's what wealthy people do differently. And I don't mean people who look wealthy, I mean people who are actually wealthy. The people studied in the book The Millionaire Next Door, who have net worths of several $1,000,000, but live in houses valued at $320,000. The people who drive 10-year-old Toyotas and shop at Costco and pack their own lunches. These people understood the secret. They locked in their lifestyle at a level they were comfortable with, and then they invested every single dollar of income growth for the rest of their careers. When they got a raise, the raise went into investments. When they got a bonus, the bonus went into investments. When they paid off a debt, those payments went into investments. They never upgraded. They never inflated. They just kept compounding. Let me tell you about my mother because she is the living embodiment of this principle. My mother, Georgette, was not a high-income earner. She worked a normal job. She lived a normal life. She didn't drive a fancy car. She didn't wear designer clothes. But she had a rule that she followed with religious discipline for her entire working life. She saved 1/3 of every single paycheck, 1/3, and she invested it in boring, large cap, dividend-paying stocks and bonds. Nothing fancy, nothing exciting, just quality companies that paid her cash every quarter. And she reinvested every single dividend. She never touched the money. She never used it to upgrade her lifestyle. She just let it compound for decades. And when she passed away and her will was executed, I was shocked at the size of her portfolio. It was enormous, far larger than anyone in our family expected. My mother, who never earned a huge salary, who never started a tech company, who never appeared on television, built a fortune through nothing more than discipline and the refusal to inflate her lifestyle. That lesson changed my life, and it should change yours. Because here's the math that most people don't want to face. If you earn $65,000 a year and you save 15%, which is my golden rule, that's about $9,750 per year. If you invest that in a diversified portfolio of quality stocks, earning the historical average of about 9 to 10%, after 40 years, you'll have roughly $3.3 million. $3.3 million on a $65,000 salary. But here's the key, you only get to $3.3 million if you maintain that 15% savings rate for the entire 40 years. If you let lifestyle inflation creep in, if you start spending your raises instead of investing them, you might end up with $800,000 or $500,000 or less. The difference between $3.3 million and $500,000 isn't a different salary. It isn't a different investment strategy. It's whether or not you upgraded your lifestyle every time your income went up. Now, I know what some of you are thinking. Kevin, you're worth $400 million. Are you really telling me you don't live a nice life? And let me be clear about something. I'm not telling you to live like a monk. I'm not telling you to never enjoy your money. I drive a nice car. I live in a nice home. I enjoy good food and good wine. But here's the difference. I earned the right to those things by building wealth first. I didn't buy luxury before I could afford it. I didn't lease a Mercedes when I was making $60,000 a year. I didn't buy a mansion before I had the investments to support it. I built the wealth first, and then I allowed myself modest upgrades that represented a tiny fraction of my net worth. That's the order that matters. Wealth first, lifestyle second. Most people do it backwards. Lifestyle first, wealth never. And let me hit you with something else. The money you don't spend is the money that creates freedom, real freedom. Not the Instagram version of freedom where you're posing on a yacht that you rented for an hour. I'm talking about the freedom to walk away from a job you hate. The freedom to start a business without worrying about making rent. The freedom to retire at 60 instead of 75. The freedom to help your children buy their first home. The freedom to weather an economic downturn without losing sleep. That freedom comes from invested capital. And invested capital comes from the gap between what you earn and what you spend. Every dollar you spend on lifestyle inflation is a dollar that can't buy you freedom. You're literally trading your future independence for a slightly nicer car that's going to be worth nothing in 5 years. Here's what I always tell people, and this applies whether you're making $40,000 or $400,000 a year. Treat every raise, every bonus, every unexpected windfall, every tax refund as investment capital, not spending money. Investment capital. If you get a $5,000 raise, don't adjust your budget. Don't upgrade anything. Set up an automatic transfer to your brokerage account and invest that $5,000 every year for the rest of your career. If you get a $10,000 bonus, same thing, straight into investments. Your lifestyle stays exactly the same. Your wealth grows exponentially. This is the strategy that built my fortune. This is the strategy that my mother used. This is the strategy that every quietly wealthy person I've ever met follows in some version. Now let me give you some very specific practical steps because I don't want this to stay theoretical. I want you to go home tonight and actually do something about it. Step 1, go through your bank statements from the last 3 months, every single transaction, and I want you to categorize every expense into 2 categories, needs and wants. Rent is a need. That streaming subscription you forgot about is a want. Groceries are a need. That $30 delivery order at 11 at night is a want. Be brutal with yourself. Be honest, because most people who do this exercise for the first time are horrified at how much money they're wasting on wants that don't actually make them happy. Step 2, calculate the total amount you're spending on wants every month, then cut it in half. I'm not saying eliminate everything you enjoy, I'm saying cut the waste in half. The subscriptions you don't use, cancel them. The dining out 4 times a week, make it 2. The brand new clothes every month, wear what you have. Half of your want spending, redirected to investments, could change your financial future completely. Step 3, automate everything. This is critical. Don't rely on willpower. Willpower is a depleting resource. You have a finite amount of it every day. And by the time you're tired and stressed and looking at something you want to buy, your willpower is gone. So take willpower out of the equation. Set up automatic transfers from your checking account to your investment account on the day you get paid, before you even see the money. before you have a chance to spend it. Pay yourself first, automatically, every single time, and then live on what's left. If you do this, you'll be amazed at how quickly you adjust. You won't miss the money because you never had it in your hands in the first place. Step 4, when you get a raise, immediately increase your automatic investment by the amount of the raise. Don't even think about it. Don't give yourself time to imagine what you could buy with that extra money. Just increase the transfer. If you were living fine on your previous salary, you can keep living fine on the same amount. The raise goes to building your future, not inflating your present. And I want to tell you about something specific that makes this strategy even more powerful: gold. People are always surprised when I tell them that gold is one of my best investments of all time. It doesn't pay dividends. It doesn't generate cash flow. And I'm a cash flow guy. I love dividends more than almost anything in investing. But gold serves a different purpose. Gold is an insurance policy. Gold is a stabilizer. Gold protects your purchasing power when everything else is going haywire. I've been buying gold for decades, and when gold hit its all-time high in 2023 at around $2,078 an ounce, a lot of people told me to sell, lock in the profits, cash out, but I kept buying, and since then gold has surged past $4,000 an ounce. If I had listened to the people telling me to sell, I would have missed an approximately 83% return in just 2 years. The lesson: when you have a proven strategy, when you own quality assets, don't sell because someone tells you it's the top. Hold, keep building, let the compounding work. And this ties back perfectly to the main point. The reason I was able to keep buying gold at all-time highs, the reason I was able to keep adding to my positions when other people were taking profits, is because I never inflated my lifestyle to consume all my income. I always had capital available to deploy. I always had cash on the sidelines waiting for opportunities. Because when you live below your means, you create options, you create flexibility, you create the ability to take advantage of opportunities that broke people, or people who look wealthy but have no actual capital, simply cannot access. That's the hidden superpower of this strategy. It doesn't just build wealth through compounding, it gives you the ammunition to strike when others can't. Now, let me address something that I think is absolutely critical for anyone watching this who is under 40. You have the greatest asset in the world, and you probably don't even realize it. Time. Time is more valuable than money. Time is more valuable than talent. Time is more valuable than any stock tip or investment strategy, because time is what makes compound interest work. Every year you waste not investing, not building wealth, not following this principle, is a year of compounding you will never get back. I told someone just the other day on social media, if you're 20 years old and you have $1,000, put it in a stock index and forget about it. Add to it every week. The market has delivered close to 10 to 12% a year over the long run. Start early, stay consistent, and you'll retire rich. That's not hype, that's math. That's 40 years of compounding doing what compounding does. But here's the catch. It only works if you don't sabotage yourself with lifestyle inflation. It only works if every time your income goes up, your savings rate goes up with it, not your spending, your savings. Because the person who saves 15% of $50,000 and then saves 15% of $70,000 and then saves 15% of $90,000 is building exponential wealth. But the person who saves 15% of $50,000 and then spends the entire raise to $70,000 and then spends the entire promotion to $90,000 is running on a hamster wheel. They're earning more, they're spending more, but they're not building anything. And that's the tragedy. The hamster wheel feels like progress because the paychecks keep getting bigger, but it's not progress. Progress is measured by net worth, not income. And net worth is the difference between what you own and what you owe. It's the money that's working for you, not the money flowing through your hands and out the door. And let me tell you why this matters even more right now in 2026 than it has in years. We're living in an uncertain economic environment. Tariffs are creating price pressure. The stock market is at elevated valuations. Inflation has already eroded people's purchasing power. Interest rates are higher than they've been in years. The people who are going to survive and thrive in this environment are the people who have a financial cushion, the people who have been living below their means and investing the difference, the people who can weather a downturn without selling their investments at the bottom, the people who have cash available to buy quality assets when they go on sale, and the people who are going to get crushed are the people who've been spending every dollar they earn, who have no savings, no investments, no emergency fund, and no ability to handle any financial shock whatsoever. That's the real cost of lifestyle inflation. It doesn't just slow down your wealth building, it makes you fragile, it makes you vulnerable. One layoff, one medical emergency, one recession, and your entire financial life collapses because you have no buffer. You spend it all on looking wealthy instead of being wealthy. Let me put this all together for you in the simplest possible terms. The biggest wealth secret is behavioral, not financial. It's not about finding the right stock. It's not about timing the market. It's not about starting a business or getting a higher paying job, although all of those things can help. The real secret is controlling the gap between what you earn and what you spend, and then investing that gap in quality assets that compound over time. It's resisting the urge to upgrade. It's saying no to the nicer apartment when you get a raise. It's driving the paid-off car for another 3 years. It's packing lunch instead of spending $28 at the restaurant. It's making coffee at home for 20 cents instead of paying $5 at the cafe. None of those individual choices seem important, but compounded over a career, they're the difference between retiring wealthy and retiring broke. And let me tell you something else that ties this all together. When I invest, I look for 3 things in any company: quality operations with strong financial performance, diversification across sectors, and dividends. I demand dividends. I want to get paid while I wait. And that exact same philosophy applies to how you should manage your personal finances. Your income is like a company's revenue. Your expenses are like a company's costs. And your savings and investments are like the dividends you pay to yourself. A good company doesn't blow all its revenue on fancy office furniture and executive perks. A good company reinvests in growth, maintains a strong balance sheet, and returns cash to shareholders. You should run your personal finances the exact same way. Reinvest in yourself through education and skill development. Maintain a strong balance sheet by staying out of debt. And return cash to the most important shareholder in your life, which is your future self, by investing consistently and refusing to inflate your lifestyle. I've been very successful in my life, and people ask me what drives me. It's not money. I woke up rich one day, but I didn't care. Now I work harder than I ever did. What drives me is freedom, personal freedom, the freedom to make choices based on what I want, not what I can afford. And that freedom was built dollar by dollar, year by year, by following this one principle. Never change your fundamental lifestyle as the money piles up. Accumulate wealth silently instead of spending loudly. Let the money compound. Let time do its work. And one day, you'll look at your portfolio and realize you have more money than you ever imagined. Not because you got lucky, not because you found some secret investment, because you had the discipline to do what 90% of people refuse to do. You kept your lifestyle the same while your income went up. That's it. That's the whole secret, and now you know it. Now, if this video opened your eyes, if you finally understand why some people build wealth while others just look wealthy, I need you to take action right now. Smash that like button. Tell the algorithm that this kind of honest, real financial education matters more than clickbait and hype. Because every time you like and share a video like this, you're helping someone else discover the truth about money that could change their life. Leave a comment below and tell me honestly, have you been guilty of lifestyle inflation? Have you upgraded your spending every time your income went up? And more importantly, what's one expense you're going to cut starting today to start building real wealth? Be honest. There's no judgment here. We're all learning. And the first step to fixing a problem is admitting you have one. I read every single comment, and I want to hear your story. And if you haven't subscribed yet, what are you waiting for? Hit that subscribe button right now. Become a member of this channel. When you become a member, you're investing in the most valuable asset you have, which is your financial knowledge. Because the greatest investment you'll ever make isn't a stock or a bond or a piece of real estate. It's the investment you make in understanding how money actually works. We're going to keep bringing you the truth, the strategies, the no-nonsense advice that actually works. We're going to keep showing you what the quietly wealthy do differently from everyone else. Because in a world full of financial noise and garbage advice, this channel is your signal. Money doesn't care about your feelings. It doesn't care about your ego. It doesn't care if your neighbor drives a nicer car or if your coworker just bought a bigger house. It only cares about the decisions you make. And the best decision you can make right now is to freeze your lifestyle where it is and invest every dollar of growth from this point forward. Stop looking rich. Start being rich. There's a world of difference between the two, and now you know exactly which side you want to be on. That's how you build real wealth, not the Instagram version. Real wealth, the kind that lasts generations, the kind that buys you freedom, the kind that nobody can take away from you. Now get out there and make it happen.